Non-farm productivity, fourth quarter preliminary expected up 3.9%, comes in very strong at 6.6. This is very, very good news. But do remember, the problem is that in the rearview mirror, we had minus 5.2, which was the worst productivity level since 1960. So we are going to bring that back a bit and just standalone 6.6 is the best since, well, the high water mark post-COVID, which was the second quarter of 2020 at 11.2. Unit labor costs were up 0.3%. That's 1/3 of the expected 1% gain. If we look at initial jobless claims, expecting 245,000, 238,000, and that's versus a slightly revised 261,000, which means it is down 21,000. If we look at continuing claims, 1.628 million, darn close to expectations. That follows 1.672 million. So we're lower, but we're not at the lowest level in either metric. 188,000 from early December of last year is the low water mark for continuing claims, well pre-COVID. That goes into the 1960s. And of course, continuing claims the last week of last year came in at 1.555 million. So even though they're better or as expected, they're not at the best levels. And productivity is good news because we really got walloped on productivity even year over year. So making this comeback should be something to be happy about. As Alan Greenspan once said, productivity is the magic bullet to the U.S. economy. Melissa Lee, back to you.
Rick Santelli, thanks. Steve Leisman joins us now with more. Steve.
Yeah, I really like the claims number, and I'll tell you why. 238, a little bit lower than expectations. It shows that, and I'm hoping what it shows is that we're on the downside of some of the impacts of the Omicron surge here. And that may be, actually, I think I lost my microphone there, a little bit sooner than expected. It's kind of nice to see it showing up in the numbers quite so quickly. And hopefully the other data follows suit here. The productivity surge tells us what? That we're getting by with higher inflation and a worker shortage by getting more efficient. And Rick is right. You need to think about the second quarter, the third quarter, which was negative, this quarter, which was very positive, and ask the question, how much of the productivity gains that we've seen in this economy, where we're at GDP levels, but with many millions of fewer workers, how much of that holds on to the economy? And that could be potentially long-term good news. Maybe not good news for your Meta investors today, but long-term on technology and other issues that matter for the workplace and how we live. The idea that we hold on to some of this incredible productivity and ways that we found to do more with less in the U.S. economy. Melissa?